Okay, good evening and welcome back, everyone. My name is Tony Zhang. I'm the Chief Strategist here at OptionsPlay, and I'm very excited to embark on our 2021 Options Education Series that is going to continue what we started last year. Every 2 weeks, I'm going to be back to talk to you either about the current market conditions and what we see as opportunities in the market, as well as options education, so that you can understand what are the best practices to take the ideas that you may have in the broader markets, whether it's in equities, whether it's an index, or specifically perhaps a commodity that you have a view on, how you can take advantage of those views using limited risk with options. So today, what we're going to focus on is just an introduction on where the current markets currently sits. This is going to look at everything from equities, looking at the sector rotation, looking at commodities as a way to gauge where are there potential opportunities, where do we see potentially some weakness over the next few weeks, and show you how you can utilize options to leverage those views. And then in 2 weeks' time, we're going to come back, we're going to talk about some option strategies and the best practices for deploying those trades. So before we get started, what we're going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. So just to give you a quick wrap up of what we're going to go through here today, we're going to start off by just giving you an understanding of what our 2021 options education agenda is going to be, give you a little glimpse into what's coming up on the calendar over the next month so you can prepare and make sure that you are ready to come to those sessions. We're going to do a Nordic market review today. We'll look at all of the Nordic markets, but we'll also take a look at specific sectors within the Nordic markets to see where we find potential opportunities. We'll look at some of the economic indicators, what they're currently showing us in terms of economic indicators, in terms of whether or not the economic indicators are performing on par with where equity markets are currently pricing. Then we'll share with you some of our trade ideas. This is really to give you a sense for how I'm looking at opportunities in the market, but also how I'm leveraging those ideas using options. And the goal here is to really make sure that when we're right on a trade, we're able to capture those profits. But more importantly, if we're wrong on any of those ideas, we want to make sure that we're able to control our losses. And that's really where options comes into play. And then I want to share with you a new options course that we have launched. So for those of you that are new to options trading, or even if you have experience options trading, a course that we're launching so that you can come to each session prepared. Some of the sessions that we're going to be doing this year require some basic knowledge of options trading. So the course is designed to prepare you for those things before you come to these live courses so that you're able to come with a fair amount of knowledge and you'll be able to ask questions during those live sessions. And at the very end, we'll open this up for Q&A. So I'm really excited to embark on this here for 2021. Like I said, we did a lot of sessions in 2020. And I'm really excited to continue that here into 2021 for all Nordic investors. So just to give you a glimpse into the calendar here, today we're here to talk about the Nordic Market Outlook Series. This is something we're going to be doing every month, looking at the Nordic markets, looking at where do the broader equity markets sit, where does the sector rotation currently point to potential opportunities within specific sectors, looking at commodities, looking at specific ideas, and showing you how, as an option strategist, I would play those ideas to limit my risk to give you a better understanding as to how options can be leveraged for your portfolio. Next, 2 weeks from today, we're going to be talking about trading calendar and diagonal spreads. So we're going to be talking about a slightly more advanced strategy. This is really where I'm going to show you where to access the course. So if you find yourself, maybe needing a little bit of a catch up on, basics of options trading, we'll show you how to access the course so that you can come to the session 2 weeks from today with a little bit more knowledge, ready to learn about calendars and diagonal spreads. The 2 weeks after that, we're going to do another market outlook series. Like I said, every month we're going to be doing these market outlook series. And then at the end of April, we're going to be talking about long-term investing with options. I'm going to be introducing some thematic trades during that April 28th session. We'll be looking at some of the longer term trends that we anticipate in this market and how you can take those views using long dated options. So that's what's coming up in the upcoming calendar. Now, for those of you that are here during today's session, you are already automatically registered for those upcoming sessions. But for someone who's perhaps watching this recording, maybe you're not registered for this webinar, you can register for the whole series at trade.optionplay.com/OMX. If you go to that site, you'll be able to register for all of these upcoming sessions. So I encourage, if you're learning about options, if you're interested in options trading, we're doing a whole series of webinars every 2 weeks to keep you up to date on the broader markets and give you a better understanding as to best practices for trading these types of option strategies. So the primary question that I want to help investors answer here today is, I think, what's on many investors' mindset at the very moment as we see equity markets slow in terms of momentum. We had some strong equity gains here towards the end of last year, beginning of this year. We've seen a lot of that momentum slow down. We've seen a little bit more volatility here over the past month, depending on what segment or what sector of the market you tend to follow or trade. But a lot of investors are currently seeing a bit of rotation in the market. So I want to help investors answer, how can you view the rotation that you're seeing in the equity markets and how you can use that for a directional view in the Nordic markets. So my name is Tony Zhang. I'm the chief strategist here at OptionsPlay, and I want to share with you my technical research, my economic research, and how I utilize options to leverage the different opportunities and views I'm going to show you here today. So before we get started, I just want to do a quick poll. If everyone can please bring up the chat window, which is at the bottom of your screen. If you could please bring up that chat window and type in 1 if you're brand new to derivatives and options trading, or type in 2 if you are experienced or have been trading options in your account. I just want to get a quick glance of the audience here. Okay, so I see quite a few 1s, meaning investors who are new to options, but I also see quite a few 2s. So I'm really looking forward to giving everyone just a snapshot of the broader markets. I'll do a quick introduction of options, some of the option strategies that we'll be discussing here over the next few months. But again, for all of you that answered 1, I highly recommend you to stay to the end, because I'm going to show you the course that we have put together for you that's free of charge, that you can access to learn more about options trading. And then you'll come back to our session here in 2 weeks' time with a little bit more knowledge, and it's going to help you improve your options education and accelerate your options education. So let's go ahead and start with the broader market. So I'm going to start with the 4 major market indices. So I'm actually just going to pull up the charts here to show you. We'll start with the OMX S30. As you can see, we've, on the weekly chart, we've really have seen the OMX S30, which started to lag behind in terms of performance towards the end of last year, really start to outperform here over the past few months. The past, I would say, roughly month and a half since the beginning of the year, we've really seen a strong outperformance here from the OMX S30. Now, the OMX S30 really started to slow down a little bit of performance here towards the end of last year, picked up a little bit towards the end into the last year, and then this year really started to take off here. So as you can see here, both on the weekly and the daily chart, it has reached an overbought condition. So on the RSI, 14-period RSI for both daily and weekly, it is now above that 70 level. So this is now overbought. There are some concerns when you see these overbought conditions that you may see a bit of a pullback here. So even though the OMX Stockholm S30 index is by far the strongest index out of the 4 Nordic major markets, it is at a point where continuing to push long positions in this particular index, I think right now the probabilities do not favor entering new options or new long positions, that you're better off, in my opinion, waiting for at least a pullback to the 21-day moving average, which is roughly 2,095 or $2,100 on the OMX S30, which is about 75 points away from where it's currently trading, before you can look for another opportunity to seek a long exposure here. So that is some concerns that I see with the OMX S30 at the current moment. Now, if we shift over here to the Copenhagen 25, the Danish OMX C25. If we look at the Danish OMX C25, What's interesting about the Danish markets is that throughout the pandemic, since the middle of last year, since June, this was the first one of the major Nordic markets to reach a new all-time high back here at the end of June. Stockholm didn't reach a new all-time high until the end of last year. So the Copenhagen index really took the leadership here last year towards the end of June, and was the top performing index until pretty much the beginning of this year, when that started to turn the other way around, where the Swedish market started to outperform and the Danish index started to underperform. And as you can see here, the Danish markets really have struggled here to make a new high since the beginning of the year. It pretty much made the high on the beginning of the year and has failed to break above those levels since. And it's now made a lower high, which is concerning. It's made a new lower low and a new lower high. So this really potentially starts what could be the start of a downtrend here for the Copenhagen index. Now, if it can break back above this level, it certainly could potentially get back to the 1700 level here to the upside. But we're starting to see what looks like the start of a potential downturn here for the Copenhagen index, especially as this channel so far is still holding. So that's one that is concerning to me, is seeing this poor relative performance here from the Copenhagen index, which has been leading the markets higher. Now, you can see this, you can think of this two different ways. You know, when you see the Swedish markets reach that overbought condition, you start to see the Copenhagen index make lower highs and lower lows. This could be the start of a lower rotation, or perhaps the broader markets turning lower. But, you know, largely so far, we don't have any fundamental evidence of that, meaning we're not seeing corporate profits slow down substantially. We're not seeing the economic indicators slow down. So this is more likely a bit of a correction rather than a major market top here. But that's yet to be seen. Until the markets break below this 200-day moving average, I wouldn't say that we're bearish in this particular market, but certainly positioning right now is a little bit overextended here to the top side. Now, if we look at the Helsinki 25, if we look at Finland, as you can see, is actually also one of the stronger markets here. It's not overbought. So this is one of the markets you can see as the trend is fairly strong here to the upside on the weekly chart, fairly strong trend here on the daily chart. The RSI is nowhere near overbought, which means that there is still plenty of room for this to continue moving higher. So when we look at Helsinki, in conjunction with the strength we're seeing out of Sweden, a bit of slowdown here in terms of relative strength, in terms of the Copenhagen index, largely these indices are still in that bullish phase. Some are a little overextended, need to pull back a little before they can continue moving higher. But on balance, you see a fairly strong response across the major indices. And then lastly, if we look at Oslo, Norway, notice how Norway is also one of the strongest markets. Norway also, notice here on the weekly chart, very strong uptrend, both on the daily and weekly chart. But as you can see, similar to the similar to the Swedish markets, both the weekly and daily charts have reached overbought conditions. So positioning is a little extended here to the upside. Now, the one thing that we need to remember is that these markets all have different characteristics. If you look at Oslo, it's very oil and gas heavy. If you look at Sweden, it is a fairly diversified group with quite a bit of industrial names, consumer discretionary, as well as some technology names. Copenhagen has a lot of technology and biotech names. So the makeup of each of these markets are different. And that's why you see quite different performance across these different sectors. But the one thing that I do want to point out here is looking at crude prices. So when we look at crude prices, oil prices, this is really where we have seen a substantial move to the upside over the past 4 months or so here, pretty much since the November election that we've had here in the US. We've seen a substantial breakout here above this $44 level here in oil, and we've seen a large move to the upside. And this is the daily chart, same thing. This is that breakout level. Once it broke out, had a small pullback, and basically shot up since then. Now, this is a pretty major move here in oil, but the one thing I want to point us to is the fact that since February 16th, which is about the past month. As you can see, oil continues to make higher highs, but momentum has continued to make lower lows. This tells us that the trend or the momentum of this uptrend that we've seen over the past 4 months is starting to come to a close, that it's losing ground on momentum. There are signs of exhaustion. It was overbought conditions, and this is likely going to see at least a bit of a moderation and a consolidation before it can continue moving higher here. That's going to put some downside here for some of the oil and gas heavy indices. So if you look at Oslo, that's why we've seen such strong performance out of Oslo. But as oil starts to, the price of oil starts to slow down in terms of their gains, I also expect Oslo to be perhaps slowing down in terms of the strength that we're seeing. So out of the major indices, we see quite a bit of rotation here. And the one thing I want to point out here is that rotation is healthy for a market rally. You don't want just a single market or a single sector of the market dominating and continuing to outperform while all the other sectors get left behind. When you see that type of market, that's usually the sign of an unhealthy market. That's usually how asset bubbles are created. And those are usually the signals that we have before a major market sell-off. But that's not what we're seeing right now. We're seeing a healthy amount of rotation. At first, it was Copenhagen that was leading towards the end of last year. Then Sweden and Norway started to lead over the past about 2.5 months or so. And that's starting to slow down a little bit. And perhaps we see a little bit more outperformance here from Finland. So when you have that kind of rotation, that, in my opinion, is fairly healthy. And for those reasons, when I look at everything on balance, I still have a relatively bullish view here in equities, especially when we look at the economic indicators that are still continuing to improve. And I'll take a look at the sector rotation here as well. So let's first take a look at some of the economic indicators that we typically look at. So if we look at unemployment rates here in Sweden, this is the public employment system, continues to see improvements here in the unemployment rate here in February, down to 4.4%. Swedish household consumption continuing to rebound here, but still pretty subdued, if you will, compared to pre-pandemic levels here, -3.8. So household consumption still in contraction territory. So not all things are out of the blue, if you will. I'm sorry, not all things are out of the issues right now with Swedish employment numbers and Swedish economic numbers. We're starting to see services pick up a little bit, but manufacturing remaining fairly strong here for Sweden. As we see here, industrial orders actually rebounding quite strongly here, 8.5% in terms of year-over-year growth in industrial orders versus the same time last year. That's fairly constructive here. This is comparing this January to last January, which is prior to the pandemic. So we're seeing increase in capacity of industrial orders now compared to the pre-pandemic levels. That is fairly strong. The concern for most economies around the world right now is that service side of things. Industrial production, largely we've seen across the globe, has recovered back, if not exceeded pre-pandemic levels. But services is really where we've seen a substantial decline. This is referring to bars, restaurants, hair salons, these types of services. The challenge with services is the fact that when you're stuck indoors for a year and your barbershop reopens, you're not going to get all the haircuts that you lost over the last year. You only get one haircut when they reopen. So there's a lot of things with services that don't just rebound as quickly as manufacturing, because many times if you need manufacturing done and the plants are closed for 6 months, you just kind of catch up as they reopen. On the services side, there's no catch up. There's no catch up mostly on services. And services is really the segment of the market that hasn't rebounded, hasn't gotten back to positive territory. So it's still contracting versus the same time last year. That's really the economic indicator that I think investors who are playing for further upside need to have an eye out for, is the services production side, because you need to see continued recovery here on the services side for this economic recovery to continue to take shape. If we continue to see more of this moderation on the services side, that's going to be concerning to me as to how much higher the equity markets can continue to push if these services numbers do not continue to improve. So when we look at the broad-based market, those are some of the economic indicators that I think is very important to pay attention to for equity investors. So let's take a look at the European sector rotation. Let's take a look at the individual sectors within Europe and how they're performing here. So this is what we call a sector rotation chart. A sector rotation chart is effectively taking a look at all the sectors and comparing how they perform against an index. So here we're using the Dow Jones European Index. And on one chart, what we're plotting is the momentum of that sector against the index. And on the bottom, we're charting the relative strength of that that sector versus the index. And what you get are these sector rotation charts. And what they give you a sense for is really which sectors are leading the markets, which sectors are lagging behind, and showing you how that's changed over time. So the green chart that you see up here is energy. And there's no, I don't think it really is a surprise to anyone to see that energy has been a strong leader for the past roughly few months. And over the past few trading days, this is probably about 7 or 10 trading days, we've really seen that energy relative strength or momentum start to slow down here. As I was showing you before, that crude pricing, we saw that momentum slow down substantially on crude pricing. And that's where we're seeing a lot of the energy stocks that have been leading the markets higher for 3-4 months have started to come back down. So as you can see, energy's at risk of getting back into the weakening category. So as you're positioning here in this current market condition, energy is probably not one of the top picks here at the moment. Financials, on the other hand, has been a leader, has seen a bit of decline here over the past few trading days, but actually has now rejoined back into the leading categories. So this is one where, this is really the rise in global rates that we have seen across the board that's driven the exposure in financials. So some of the banks continue to outperform here. Those are some of the opportunities that I think are still potentially on the table, even though financials have been a large gainer. Energy and financials are by far the two best performing sectors in the broader markets. As you can see over the past 21 trading days, the oil and gas index up 48%, financials up 31%, by far the two best performing sectors. And then we look at basic materials. Also, we've really seen basic materials and industrials be both are fairly strong here, but starting to slow down at this. And we're seeing this across not only in Europe, we're seeing it in the US. Basic materials and industrials starting, have been, I would say third and fourth behind financials and energy, but slowly losing a little bit of momentum here. So that's industrials, as you can see. What I do like about industrials is that even though industrials has been weakening, it's actually starting to rotate a little bit back into that leading category, versus if you look at materials has been leading, but is actually starting to decline a little bit. So between materials and industrials, even though we typically put them in very similar categories, I do feel industrials has a leading an advantage here from a sector perspective. And then we look at technology. Technology, has lagged behind for quite a bit of time, came back into that leading category for a short period of time, but is starting to slow down again too. So, technology is not my top pick here at the moment. We're still seeing more volatility out of technology. The rising rates across the board and across the globe has really condensed the growth outlook for many of these sectors, especially the high beta sectors, which is predominantly technology here right now. So that's why when we look at technology, I still think that the rising rates, the rise in rates, I don't believe, in my opinion, that move is over. So I think that you could continue to see some technology stocks see some multiple contraction here. So from my perspective, technology, I don't believe, is the best place to look. Healthcare, it's interesting about healthcare because we've seen healthcare kind of really lag behind. Healthcare is actually the worst performing sector out of the entire Dow Jones Dow Jones Europe index. As you can see, the healthcare index up 1%, while the broad-based index up 18%. So a severe amount of underperformance here for healthcare over the past 21 trading days. But this is really where you could start to see healthcare improve, as it is the least worst performing index. It's almost so bad it's perhaps good. And I'll show you some ideas that we have here in the healthcare space that could potentially provide some of that potential upside for healthcare. The one sector that I do want to point out here is telecommunications. Telecommunications recently really outperforming the sector, outperforming the market, showing us some leadership and then declining, but then recently really coming back to life here over the past just 3-4 trading days. So those are also some of the opportunities I want to take a look at here today. And then utilities and consumer goods are really the two that are continue to lag behind. Those are ones that I don't think are worth taking a look at. Consumer goods looks like it's starting to shift around here, but we're not quite seeing it. I'd like to see a little bit more momentum here through consumer goods before we look for opportunities here in consumer goods. So that's how I'm currently viewing the broader markets. That's how I'm viewing the individual sectors. So as you're looking for opportunities, that's how I want to think about the markets. So let's take a look at some opportunities here in the broader markets. So this is where I'm going to use the OptionsPlay tool. This is a tool that everyone here has access to free of charge, courtesy of the NASDAQ exchange. So I'm going to show you how to access these tools for free in a few minutes. Once we finish up, I'll show you how to access this tool that I'm showing you right here. I'm also going to show you how to access the course so that you can watch those courses before our next session. So the tool itself is divided into 3 sections. For those of you that are brand new to OptionsPlay, on the left-hand side, you have trade ideas and watch lists. These are pre-built trading ideas that are new, freshly scanned for you each day, or on the watch list that is a pre-built watch list for you with all of the optionable symbols within the Nordic markets. In the middle panel is our security analysis panel, and I'm going to walk you through this for some of the ideas as to how we read this panel for the directional view and relative strength metrics that are very important to my work as a strategist. That's how I largely am able to quickly make a directional view on any symbol that I look at, even if I'm not quite familiar with that name. And then lastly, one of the most powerful aspects of our platform, the trading and income tab. This is designed to make your options trading as simple and as easy as possible by providing you with the starting points, the strategies, the expiration dates, the strike prices, so that even if you're new to options trading, you can have starting points, and then providing you with tools like the P&L simulator so that you can actually see how these strategies perform. If the trade goes in your favor, if the trade goes against you, how much do you have to risk? How much potential reward do you have? These are important metrics to understand before you place a trade. So what I'll do today is I want to go through a few different symbols just to show you the spectrum of symbols that we discussed here today. So we were talking about industrials or materials. I certainly think that industrials has a favor, in my opinion, versus materials here. So if we look at some of the industrial names like Electrolux, we really have looks like a pretty interesting breakout here. I will say Electrolux is a little bit overextended here. We've had a big move here from 200 to 236 over the past few weeks here. As you can see, the technical score is an 8, meaning its relative strength ranking is 8 out of 10, which is fairly strong, meaning it's outperforming the broader markets. So when we look at sector rotation charts, what we're really looking at is relative strength. How are these sectors performing relative to the market? If they're outperforming, they're likely going to outperform. They're underperforming, they're likely to underperform. So that's the theory behind relative strength, to know, is a stock that you're following outperforming the broader markets, or is it underperforming? In this case, a score of 8 tells me Electrolux is outperforming the OMX S30. I also look at the trends, the 1-month and 6-month trends, and I look at how long the stock has been in a trend for. As you can see here, during this period, the stock was in a bullish trend. Then it started to pull back a little and the trend quality deteriorated. And then it turned bullish here on March 4th, before that major breakout here to the upside. So we could be a little late here on this particular move. So this is really why options is very important to me, because if you can go out and buy the stock, but the concern that I have with trades like this is you could pull back fairly heavily into that 210, 214 level here before it continues to move higher. But it also just could continue to move higher here. So I want to be able to take advantage of that move to the upside, but I also want to limit my losses if this stock just pulls right back to that 215 level. So that's really where I turn to options. I want to utilize options to limit my risk. So you can use the default strategies here, which are the call and the call spread, and that's usually a good starting point for most investors. You can modify this if you want. You can change the expiration dates just by clicking on the expiration date cycle, and you can select your different strike prices just by clicking that with the mouse very quickly, see different strategies, compare them side by side, and always use the P&L simulator. I always encourage investors, if you're starting out with options, before you look at how much money you can make, always look at how much money can you lose. That's the question you should always ask yourself first on any trade, whether you're trading stocks, options, futures, anything. Always ask yourself, how much could I lose on this trade? Because you need to make sure you're comfortable with that number first before you look at how much money can you make. So I always encourage investors to say, what if I'm wrong, right? What if I got this wrong and the stock declines back to 215, the breakout level here? How much am I really risking here? If I bought 100 shares of the stock, I would risk 2,200 crowns, 2,300 crowns here, okay? So roughly 10% of the stock price I would lose if it simply just returned back to the breakout level, which on a trade like this, it could very well pull back to that breakout level. So I want to ask myself, am I comfortable losing 2,300 crowns? Maybe I'm not comfortable with that. So I look at the call strategy here. As you can see here, I'm losing roughly half of that, 1,700 crowns. So right off the bat, by buying the call option, I'm reducing my risk in half. And then I look at the vertical spread, and maybe you're new to options trading and you don't know what a vertical spread is. That's okay. I'll show you the course that you can take after this session to learn more about these types of option strategies. But at least you can see that it risks 905 crowns. So you're risking the least amount of capital on the strategy here on the right-hand side. And you can ask yourself, am I comfortable taking a 900 crown loss if this trade doesn't work out? Certainly if I'm choosing between these three strategies, I'll choose the one with the least amount of risk. And then once I've looked at the amount of risk, then I can take a look at, well, is the reward worth the risk? Meaning if this trade does work out, how much profit is there in it for me? Because sometimes the profit may not be enough, right? So you're risking 900 crowns, but what if you're only making 300 crowns? So the question then comes, okay, how much upside is there? So this is really where I have to look at the chart here. As you can see, this is pretty overextended. Maybe it can go another 250, 260. I don't know how much higher it can go. This is already pretty high here, right? So just remember, just because I have a good idea doesn't necessarily mean that I should place the trade. So I can plug this into the P&L simulator, and I can see that for my $23,000 risk, I'm making about $1,200 profit, which is about a 5% return on the stock. For my 1,100 crown risk, I'm making 325 crowns, which is a 27% return on my profits, on my risk. And then this risks 905 crowns, and I'll make 595 crowns, which is a 65% return. So you can ask yourself, I'm risking 900 crowns to potentially make 600 crowns. Is that enough risk to reward for me? For me, that's not quite attractive enough for me to say, yes, this is a trade that I want to make. Only if this stock moves substantially higher would this potentially be worth my while. But I'm not sure that I'm convinced that this will move up to 250, 260. Well, actually, as you can see, even 255, this improves substantially, 126% return if it moves up to 255. So you can ask yourself, do I think the stock can get up to 255 by May 21st? If you do, then perhaps this is a trade that you want to make. But these are the tools that you can use to make these decisions, to take an idea that you have in the broader markets, evaluate the stock itself to see, is this lining up from a trend perspective? Is it lining up from a relative strength perspective? And then how much do I have to risk to place this trade? Am I comfortable with that? If it is, then you can start taking a look at, your potential rewards and see, can I make enough profit, or is there enough reward in this trade for me to take on this kind of risk? Okay. And I think the best way to learn more about this platform is to go through some more examples here. So the other one I want to take a look at is Husqvarna. This is a stock that continues to outperform here pretty much since the pandemic, whether it's because people are using these tools at home or more for industrial needs. I like the stock also, but it's in a very similar situation as the other one, where it's already had a pretty strong rally here of the past few days. So as an investor, I'm always concerned that after a big move like this, you have a bit of consolidation period, perhaps even a pullback, before it continues moving higher. So I am concerned about just more of a sideways movement. So this is really where you can look at other strategies as well. And for me, as an experienced options trader, I would look at perhaps even selling a put credit spread, because a put credit spread allows me to take advantage of the trade, even if it doesn't move higher, even if it just stays where it is. I can profit from it. And this is directly in comparison to buying an option, like buying a call or buying a call spread, which requires the stock to make a move before you're profitable. So here's an example, right? This is a stock that went from $90 to, let's say, 110 in a very short amount of time, similar to how it went from 100 to 120 in a short amount of time. And then it just went sideways and even went a bit lower here. So what I can say is, what if Husqvarna just stays around 116, right? So it made a 17 crown move. Maybe over the next few months or next few weeks, it's going to make a sideways move. So what happens if, let's say, by April expiration, the stock is still trading around 116? This is really where, if you sold an option strategy like a credit spread, you'll be profitable. So if I sold a credit spread, I'm profitable even if the stock just stays where it is. And this is really the benefit of options, right? Because regardless of what your outlook is, whether you're bullish on a stock, whether you're bearish on a stock, whether you are neutral on a stock, there are option strategies that you can take to take those directional views. And as you can see, if I bought a call or bought a call spread, I would actually lose money. So here I would lose 350 crowns, and here I'd lose 300 crowns on the two strategies on the right. So just based on a timing perspective, I don't think it makes a lot of sense to buy a call or a call spread, because for those strategies to work, the stock has to move even higher. It really has to get to maybe 130, maybe not that high, maybe 125. As you can see, if the stock gets up to 125, which is another 10 crowns higher, yes, these two strategies will make a nice profit. But if it doesn't move higher and just stays where it is, these lose money. And this strategy on the left-hand side, the credit spread, though, that makes money. So again, if you're brand new to options trading and these strategies are brand new to you, these strategies are all covered during my course that I'll give you the link to in a few minutes as we wrap up here. But this just gives you a sense for how I take the use of this tool to evaluate the underlying stock and set up potential option strategies to trade off the back of it. Another one that I want to take a look at is Ericsson B. Let's take a look at Ericsson B. So telecommunications, we talked about telecommunications being one of the strong sectors here. Now what's interesting about Ericsson B is that it also had a pretty strong move here to the upside. It has pulled back to the 114 level, which is the recent high here around 114. So maybe you think that this can now continue to move higher here. So this is an interesting one, but similar type profile to some of the other trades that we talked about here. You can use different option strategies like comparing, and you can type in all different types of strategies. Next week, we're going to talk about diagonals, but you can type in all different types of strategies and see how they perform. And you can put them side by side and see buying versus selling options, and using the P&L simulator to see how much risk do I have if the trade goes south? How much money do I have to gain if the trade goes in my favor? And compare the two and see which strategy gives you the risk reward that you are most comfortable with before you place that trade. And one of the great things that we have created here is when you click on the trade button, there's a short code button. This is you can copy and paste this into your Nordnet account and be able to find this exact option, the April 16th 110 put, by copying that code into your Nordnet account so that you can quickly find the option strategy that you are seeking within OptionsPlay directly at your brokerage firm. This is designed to help make your options learning experience as simple and as easy as possible to allow you to quickly find an idea and execute that at your brokerage platform. And lastly, I'll just look at one last example here. I'll look at Astrazeneca. And this is giving everyone a bit of a counter, I would say, trend trade, right? And I'll bring up the Astrazeneca chart here just to give everyone a zoomed in version of this. So Astrazeneca has continued to underperform here over the past 6 or 7 months. But the one thing I want to point to investors too, as you can see, as this, you see a very clear downtrend here in Astrazeneca, right? That's a very clear down channel. But on the last swing low, as you can see, it made a lower low, but momentum no longer confirmed those lows and actually made a new higher low. That positive divergence is usually some of the signs that we look for near a market bottom. And we see it on both the daily chart as well as the weekly, both on the weekly chart as well on the daily chart. As you can see, the daily chart made a new lower low, but momentum no longer confirming those lows. It's kind of the opposite of what we saw in crude oil. Crude oil, as it made a higher high, momentum did not confirm those higher highs. Here, price made a lower low, but momentum did not confirm those lower lows. And that could be the sign of a market bottom. Now, this is a bit more speculative. As I showed you before, healthcare is the worst performing sector to the European index. But sometimes the worst performing sectors are the places that you want to look for a counter trend trade. So this is a bit more speculative in nature. So again, this is why I want to reduce my risk by using options. So this is AstraZeneca here. Perhaps forming a bit of a bottom here, as you can see, it made lower highs, right? Until here, it made a new higher high. So this is also additional confirmation that perhaps this downtrend is coming down to an end. And we can utilize options to potentially play for a bounce here. Now, this is really where you can, again, take different views here. You can see this as either bullish or you can see it as not bearish. Those are two different ways that you can play this. You could be a little bit safer and say, I'm not bearish on the stock anymore, but I'm not bullish by selling a credit spread, versus if you're bullish, then you might want to buy a call option or buy a debit spread. And you can use the P&L simulator to see how these different trades perform. So if I'm not bearish, maybe I don't think the stock's going to rebound very much, but I certainly think the stock is not going to go much lower. So maybe I think the stock's going to stay around this 850 level. Let's call it 840 level. As you can see here, if I sold the credit spread, I can make 1,100 crown profit on the back of roughly 2,000 crowns of risk. So I'm risking 2,000 crowns to make 1,000 crowns if AstraZeneca just stays put and doesn't move substantially higher. It doesn't move substantially lower. But if I think the stock's going to make a big move to the upside, maybe I think it's going to revisit this 920 level. Then I can take a look at perhaps buying an option, because if I do think the stock's going to make a big move up to 920, as you can see here, I can make 5,000 crowns buying a call, or 3,800 crowns by buying the call spread. Far more profit than selling the option. So that's a trade-off that you make between selling an option and buying an option. Selling an option, you can make money even if the stock doesn't move. Buying an option, you can only make money if the stock makes a big move, but you can usually make more money if you do get that big move correct. So it just depends on what your views are in the market. And hopefully today I gave you a different variety of trade ideas and different thoughts that I have that you can use and think about and use as inspiration for, looking at some of the ideas that you currently have in the broader markets and see if they line up with some of the things that you've come up with. And then as you go through the options education here over the next few weeks and come back for our live education sessions, you can learn more about how you can apply the option strategies to your views and limit your risk as much as possible and be able to make profits even if the markets don't move or if it just stays put. Many stock investors, all of you that answered one, You can only make money if the stock moves, right? But many times you might just feel that the stock's going to stay put. Maybe you think it's made a big move and it's going to stay put. You can make money from that using options. So those are the things that I hope to teach you here in these options education sessions, along with these market outlook sessions, so we can mix ideas with option strategies, so you constantly get this learning experience, this interactive learning experience of applying what you've learned to the real market conditions. So with that, that covers what I wanted to share with you here today. So a couple of things. Number one, how to access this course. A lot of you answered one at the beginning of the session saying you're new to options trading. So we put together a beginner, intermediate, and advanced course for everyone. It's free of charge. You can go to the link on the screen, which I just posted into the chat window. The beginner courses are really introductions to options, basics of buying and selling calls and puts, giving you that foundation that you need to come to the courses with. So I highly recommend for all of you that answered one to please watch the beginner courses before you come to our next options education session in 2 weeks' time, because it's going to give you the foundations that you're going to need to understand the strategies we're going to talk about here next week. The intermediate course is going to cover a lot of the strategies that I discussed here today: debit spreads, credit spreads. It'll give you a better understanding of directional strategies. So when you have a directional view, bullish, bearish, neutral, how you can leverage that using options, how you can hedge your portfolio, and get into some of the mechanics of what are the best practices for selecting an expiration date and strike price. And then the advanced courses for those of you that answered two, getting into option Greeks, talking about volatility, talking about technical analysis, and getting into the more advanced strategies like credit spreads. So that is the course that we've put together. So regardless of whether you're brand new or experienced in the options trading, these courses are designed to give you that foundation that you need so that when you come to those live sessions, you already have that basic knowledge and you can ask questions that are relevant to your learning experience and continue to improve your options experience by coming to these live sessions. And for those of you, if you have not already accessed OptionsPlay, the platform that I was just showing you, it's free of charge. You can access it at optionsplay.se. You can register for your account at optionsplay.se. And the courses are at trade.optionsplay.com/Nordic edu. So this is all resources that are free of charge, courtesy of the NASDAQ exchange. They are the ones that are paying for your access to the courses, to the education, to these sessions. So I highly recommend for those of you that are eligible to take advantage of it, to take as much of it as possible. It's going to accelerate your education. It's going to accelerate your experience for options trading. So with that, let's turn this over to Q&A. At the bottom of your screen, there's a Q&A section, or there's a button for Q&A. If you have any questions, please type them into the Q&A section. And in the meantime, I'll try to answer a few questions that were put into the chat window during my session. So there are quite a few questions about, is this event recorded? Yes, all of our events are recorded, so you'll be able to access the recording. Once we finish it, we'll email you the recording and we'll also post it onto YouTube so that you can watch it. I highly recommend for those of you that are interested in our options education to follow us on YouTube. This way you'll get a notification every single time we upload a new video. Are you bullish when you look at the Swedish markets? So Corinne, like I said, on balance, if we look at the broad-based markets, they are all quite bullish here. The Danish markets is really the one that's at risk of starting to turn a little bit lower here. But aside from that, all of these markets are fairly bullish. I do think that in the short run, the positioning is a little extreme here to the upside. So I do think that you could get a pullback here over the next 4 or 5, even 4 or 5 trading days, or maybe even 2 weeks, and then looking at a continuation higher here once you get a bit of a consolidation or a pullback. What indicators do you use to analyze on your charts? So I use a simple, very simple indicators. I use the 21-day moving average, the 200-day moving average, and an RSI. These are all standard settings. I don't use any fancy settings for my charts. I use fairly simple strategies here. A question here, can any Swedish brokers execute multi-leg trades in one order? I want to avoid legging in and out. So Gustav, I would say that you should look at interactive brokers for Swedish. If you're in Sweden, interactive brokers take Swedish accounts. They are low cost and they have execution up to 4 legs for Swedish derivatives. So I highly recommend, if you're trading these vertical spreads, to look at interactive brokers as one of your options. Sigvard, we are currently in the process of looking at a portfolio function for Swedish derivatives. We currently do not have that. It is only for new ideas. We do not have a way for you to follow your portfolio using OptionsPlay just yet. There's a question here, what about Swedish spreads? I'm not sure what you mean by Swedish spreads. If you don't mind clarifying, I'm happy to answer that question. Any other questions regarding the broader markets, regarding options? In your chart, what is the green indicator? Oh, this is what's called Chaikin money flow. It's a market breadth indicator. It gives you a sense for whether the predominant volume is buying or selling volume. It kind of just adds buying volume it increases the chart, and if there's a lot of selling volume, it decreases the chart. So you can see whether the volume is on the buying side or the selling side. It's called money flow. It is very difficult to trade when the buys and sells are very far. So I think your question is regards to the spreads, the spread between the bid and the ask price. So here's my suggestion to you, right? When you look at these bid and ask prices, you should think of it as like when you walk onto a car dealership, there's a sticker price on the car, right? But do you ever pay that sticker price? And the answer is no, because those are just advertised prices. Because think about it, a market maker has to guarantee you execution at these prices. So if someone has to guarantee you execution, they don't really have an incentive to give you a really good price, because they know that you can negotiate. So when the mid price here is 26 crowns, that is the great thing about the financial markets, is that the asking price and the bid price gives you a sense for what the fair value is, because you can calculate the fair value from the mid price. So when you're negotiating, think of the mid price as the fair value, right? So if you want to pay for this call option, the fair value is 26 crowns. A market maker will take a markup on that 26 crowns. So if you offer, let's say 26.10, right? Maybe the market maker will say, no, that's not enough. That's not enough of a markup, and that order will just sit there. So then what you can do is you can cancel that order and maybe put in an order at 26.20. And eventually you'll see that the order can get filled well before you get to the 27.25. So don't pay too much attention to the spreads, especially if the underlying stock, Astrazeneca, as you can see here, has traded almost 1 million shares today. So, there's plenty of liquidity in this particular stock. You just have to negotiate with the market makers. Don't just assume that what the advertised price on the screens is what you have to pay. That's like walking onto a car dealership and just paying the sticker price. You should never pay the sticker price. You negotiate. And the great thing about financial markets is that you have a mid price which gives you a sense for the fair value, and you can negotiate around that fair value, whether you're buying or selling. I hope that gave you a better understanding as to how to navigate the wider spreads. Any other questions? Christopher, you're welcome. Remember, the market makers want your business. They just don't have an incentive to quote very attractive advertising prices, if you will. But they always want your business. So don't be afraid to negotiate. If there are no other questions, I just want to thank everyone for taking the time out here this afternoon, or this evening rather. I really hope that you guys find this useful. I'll be back here in 2 weeks. We're going to talk about calendar spreads and diagonal spreads. I highly recommend, if you're new to trading options, go through the courses. It'll give you that foundational knowledge that you might want to come to the next session, so that you're not starting from zero, that you have that base knowledge, so that you're really able to keep up with our session next week and ask questions to help improve your trading. So with that, thank you so much. I hope you guys have a great trading day, and I'll see you guys here in 2 weeks' time. Have a great evening.